Thanks for joining us. I'm Marlon Bowling with you as we open up our grain trade, and let's take a first glance at our grain markets in Chicago. Let's go to the corn market right now and see what the first trades indicate. As we go to the trading floor on the corn board right now, we have September actually trading at 369 3/4. That is 3 1/4 higher. December up 3 1/2 at 384. Make it 3 higher now at 384 even. Let's take a look at soybeans. How are they opening up? We were about 7 higher overnight, and we're about there now. September soybeans up 6 1/2 at 958 3/4. November up 7 at 963 3/4. In the wheat market in Chicago, first of all, we have September 3/4 higher at 455 1/2. And if we take a look at the Kansas City market here, we have the September a penny higher at 460 1/2. That's just a penny from its overnight low. By the way, on Chicago, it was on the low of the overnight and early morning trade. Minneapolis wheat on the spring wheat market right now, we have September up 3 1/2 at 719 3/4. And in the cotton, to get things rolling here on a Monday, we have new crop December 23 points higher again at 70.85. So let's go to the phones and talk with DeweyStrickler of AgWatch Market Advisors in Franklin, Kentucky. He joins us right now. And Dewey, interesting markets overnight. From what I gather, talking with some analysts this morning, they said maybe there's a little bit of disappointment with the rain patterns over the weekend in the Corn Belt.
Yeah, it looks like that maybe portions of Iowa got a little bit bypassed there. I think that's one of the factors supporting the market. Otherwise, you're just beginning to see traders cover a few short positions ahead of this report on Thursday.
Now, you and I were talking during the break there that some of the crops in, well, let's say the southern half of the Corn Belt are looking pretty good. They actually look quite exceptional from the road, but you say sometimes if producers go out there and take a closer look, things may be a little bit deceiving. Why do you say that?
Yeah, it can be very deceiving. I have had several guys tell me that, yes, their soybean crop really looks good, looks lush and so forth, but when they go out there and count the pods, the pod count is just not there. Maybe this report on Thursday will shed a little bit of light on that.
Now, Thursday's reports that you talk about, they include our crop production numbers, and we have some early estimates based on a survey of the trade as far as what the yield numbers might be and the overall production for corn and soybeans here in the U.S. Now, for the corn, based on a Wall Street Journal survey, they're looking at corn yields of 168.9 bushels per acre, soybeans at 47.8. Admittedly, there are some other surveys and some private guesses that are well under that, but that would equate to corn production at 14.07 billion bushels and soybean production at 4.24 billion bushels. How comfortable are you with those numbers at this point here, Dewey?
Depends what kind of mood the USDA is on Thursday. I have seen them to be pretty well, to be aggressive right off the bat, and then other times they'd be a little more passive and they'll wait until they see additional ratings and reports come in and field surveys. So, you know, the August crop report is well known for having some fireworks. This one, like I said, it just depends here how aggressive they want to be.
By the way, I wanted to run through the U.S. ending stocks estimates, too, because that could be a key feature in the reports. We have some of those numbers, and I also have those for the 2017 and 2018 year. So on corn, they're looking for, let's see, 2.13 billion bushels, soybeans at 483 million, and the wheat at 879 million. This is for the 2017 and 2018 marketing year, which I understand could have the most impact. Dewey, we'll come back in a moment, and you and I will talk a little about our livestock trade on the other side of these messages. We're back with you, and we're talking with DeweyStrickler of AgWatch Market Advisors in Franklin, Kentucky, and we're going to take a look at our cattle board and our live cattle, feeder cattle, our lean hog board, and then we're going to bring Dewey on for discussing the current prices. So how are we opening up? We had a weaker tone on the live and feeder cattle market Friday. We had a higher tone on the lean hogs Friday as we went home for the weekend. Here's how we're opening up. Right now on live cattle, lower across the board once again. Now remember, on Friday, August did close a little bit higher, not much, maybe 22 cents or something like that. But now we have August down 50 cents. at 114.95 per hundredweight, and your October contract is down 45 cents at 113.65. And you have December starting out about 40 lower now at 114.78. If you look at the feeder cattle side of things, on the feeders, we have August now showing triple-digit losses. In fact, you see that all through the first 3-4 contract months here. So September now down $1.20 at 149.65. Now you have the October contract down $1.10 at 148.82. Let's stop there and talk about the cattle side here first. Dewey, your impression of the opening here on the cattle market today?
Well, it just really kind of goes back to the last cattle on feed report, Marlin, where it showed placements up 116%. That's going to continue to haunt the market here. Also, weights were higher last week. We're looking at third quarter production to be up. So, I mean, cattle market has a very uphill battle that it's going to go through here. Basically, all you can say, we're looking at a trade range in cattle. And with the strikes they would have against it, if we do break some of this support in the October contract at 111.15, we'll probably see the cattle come down here into the 109 to 108 area.
Anything happening overseas that you might make note of here on the cattle market this week?
I can't really say that there is.
Okay, so quiet on that front for the time being anyway. I haven't heard much out of China and their interest that they expressed earlier this year. We'll have to wait and see if that does come to fruition. All right, let's look at our lean hog trade in the early going today. And right now on the lean hog board in Chicago, we have August down a dime at 83.12, but still, interestingly, above $83 per hundredweight. October down 8 cents at 66.70 right now, and we have December down a dime at 61.35. Dewey, a lot of analysts really amazed, I guess you would say, by the fact that we had the August lean hogs going up over 83 bucks last week. They thought maybe that train had already run its course.
Well, apparently it hasn't here. When you look, like for instance, at the October contract, we've been up for a couple of days here. We've got a little bit of peak in the market, but you're looking at a pretty big discount futures to the cash. It looks like that's going to spill over into the October contract. That said, I could see the October contract moving back up into about, say, the 68, maybe 69.50 area.
All right, I do want to take a look at our outside markets too to see how they're doing, like on the dollar and also on our crude oil values here this morning. Not much movement so far on the dollar. We have September futures on the index down 30 points right now at 93.390 and now 93.380. So let's take a look at our crude oil trade, and right now we're opening up West Texas crude down 57 cents on September at 49.01. Dewey, as always, great to visit with you. Thank you, sir, for all the inputs. All
right, sir. Glad to do so.
DeweyStrickler with AgWatch Market Advisors in Franklin, Kentucky. And Janet, we are off and rolling.
Here we go. Thank you very much once again, Marlon.